All right. Well, welcome back. It's a bright 4/13, April 13th, and I'm here to give you some updates on what is really going on outside in the markets. And to do that, I'm going to flip back and forth between some screens here. And let me start off. All right, so we're going to start with the emergency actions timeline of opportunities. Okay, here we go, and we are live. I see we're up and running on the screen here, so all right, so now that we've got this up on the screen, let me walk you through this. This is the timeline of opportunities that we talked about, my gosh, over a month ago when we first started this virus crisis. And we are still within this blue box. And if you'll look here that we said that somewhere between May and June in that area, and we estimated somewhere towards the beginning of June, is right when we saw that a lot of these businesses were going to be reopening. And as soon as the businesses start to reopen, some of these businesses will do okay. Some of the businesses are still going to have a tough time because a lot of people are still worried about next to somebody at a restaurant. Are you going to go to a national major league ball? There was a study that was done and it said that over 80% of people would not go to a major league ball game until such time that they had a virus vaccine out. And I've said this from the beginning. The vaccine, which is due somewhere around in this area, is in November or December of 2021. This is where we're going to see the biggest spike in reemployment. We're going to see the biggest spike in real estate going back up again. The birth rates will start towards February or March of next year. And for those of you that haven't followed this before, let's walk right into what does this, what we call economic mapping, really mean. So when we go through a crash, the stock market is usually looking ahead to what they anticipate is going to happen. And when the stock market crashes, it's because they've already anticipated something that's going to happen bad in the future. So now where the stock market has come back within the last week or so, I mean, it's come up quite a bit. So why has it come up? Well, you read a lot of things in any kind of news medium, and it talks about how the stock market is poised for just a giant fall, meaning that it's going to have a 50% down. Look, I can't predict exactly what every market is going to do, but I do know that once the stimulus checks go out, once the stimulus starts getting spent, then we're going to see a whole different outcome on what we see as our GDP, what we see as our spend ratio. The stock market has already built in the huge amount of losses with the unemployment rate. So a lot of these factors that people are sitting there saying, well, the market hasn't seen the unemployment. Look, we know that the big institutions and the hedge funds already have a huge amount of big data that they're working with, and they are predicting this way in advance. You wonder why when you watch any of these financial news networks, when they say, hey, there's going to be about 6 million to 6.5 million in unemployment, and it comes out at 6.2 million. How do they know that in advance? Well, some people say that there's insiders. People say that the news stations are just guessing at what's out there. The algorithms that they have and the big computer systems that these institutions that are trading have are so incredible that they are making these predictions far in advance. So some corrections right here, because I know that there was a lot of people that had emailed me in, and I don't know where the misunderstanding came in, but I do want to make myself very clear. I do not believe that right now is the time to hold on to cash. I believe that you should be dollar cost averaging into the market in the next 12 months. Now, we've already lost a month, so I still think it's a very good opportunity to build back into the stock market within the next 6 to 12 months. Now, if you are one of those super conservative people and you don't like seeing very much volatility, maybe you take 24 months to buy back into the market. I can't predict for you what the emotion is going to be. We could have, a resurgence of the virus once we go back to work, and that will send the market down again. We do know that the vaccine is anywhere between 8 to 12 months from now. Once they have that vaccine, then you're going to see a complete breakout of the real estate market, of the stock market. Jobs will start to come back into play. But like I kept saying over and over again, this is not going to be any different than 2001 or 2008. The same people that have lost their jobs today are not going to go just jump back into the same exact job that they lost. What's going to happen is there's going to be a readjustment. You see Walmart hiring 75,000 people. You see all these big retailers and food companies hiring a massive amount of people. Now, will they stay after the hoarding is done? Or as the Germans are now calling it, the hamster Fuster, and apparently this is from the concept that the hamster eats a bunch of food and stores it in his cheeks, otherwise known in the U.S. as hoarding. So when these stores and retail outlets stop seeing all of the hoarding, are they going to need all those people? Well, now they'll probably go through their own set of layoffs. However, there will be some adjustments. There's going to be technology companies that are going to start hiring more people. Why? Well, there's a lot of people now that have figured out that they could do what they do in an office at their house. That will change the landscape of commercial property, of residential rental property. It will change the landscape and where dollars are spent. And we saw this in 2001 when the terrorist attacks happened. People didn't want to come out of their house. So the home subscription services back then increased. I think that's back when Netflix was still delivering CDs to the mailbox. But that's what happened, is there was a readjustment of where people look to spend their money. Now, companies like the cruise lines, there's already a 100-day freeze that no cruise lines can go out with the next 100 days. We also know that in 2021, cruise bookings are up now 40%. So do we buy cruise lines at the bottom? Well, the only two suggestions I would give you about cruise lines are, number one, buy 100 shares of Royal Caribbean and 100 shares of Carnival Cruises. And for the sole purpose that if you do cruise on those cruise lines, and assuming that they're not out of business by the time that you go on your next cruise, you can get all kinds of free stuff when you go on the cruise lines. So the benefit is, because the price is so beaten down, you can buy those 100 shares. And what they do is if you do it through us, usually we provide you with a certificate of ownership prior to your booking, so that whatever kind of discounts or free drinks or whatever else they give you on those cruise lines, you can get those. The real estate, let's talk about that for a minute, because I talked about mortgages. Mortgages are a good idea to get and apply for right now. See what the maximum is that you qualify for. I talked about this 3-4 weeks ago, that you should have started to get your mortgage applications in and refinance. And I gave the green light last week. I said, now is the time to refinance, get it started. For a while there, the first 2 or 3 weeks, what had happened was the mortgage companies actually increased interest rates, and they were trying to slow down the number of applications that were coming in. However, now the applications have slowed down. I think the prior week to last, mortgage applications had dropped like 30 or 40%. So supply and demand kicked in, and the mortgage companies dropped their rates in order to get more applications coming in. So again, it's still a very good time to get your mortgage application in and refinance. If you're going to pull money out, I would hold on to that money only if you're going to be investing in real estate. Now, I've started to see the actual indicators within real estate, even not only following some of the Shiller indexes and some of the actual houses and apartment buildings that we have been following as investments in different areas. So, we've been looking in Hawaii, we've been looking in beach towns, we've been looking in all the places where vacation plays might come into order, and they've started to drop. So just this week, I'm starting to see a massive drop. I don't expect that will slow down until somewhere around August or September, when I do believe that is going to really bottom out. And again, it's going to hit that's on commercial and on retail. However, because of the mortgage freeze, I don't believe that the real estate is going to take its biggest drop until probably January or February of next year. Now, I could be wrong because, if this virus, all of a sudden somebody comes out with a vaccine, everybody gets back to work, employment goes back to norms. I highly doubt that's going to happen because it doesn't happen overnight. Usually it's quicker on the outward, like it was in 2001 and 2008. This time it happened within about 2 or 3 weeks, but it's much slower to get it back and get the economic engine back running again. Let's talk about the stimulus checks. We know that the stimulus checks started going out, and some of you might have received that. I want to make some clarifications just so that people understand the stimulus checks. The stimulus check is based upon your adjusted gross income. And what that means is that if you have an adjusted gross income above whatever that threshold is, you're not eligible for the actual stimulus check. Now, many people have been calling our office and saying, hey, I want to get my tax returns filed because we used this charitable remainder trust, or we used, some of these tax loss harvesting strategies that you've taught us. I want to explain that does not change your adjusted gross income. The amount of deductions that you get on things like 664 trusts and charitable trusts, and those things come after adjusted gross income. So if you can go to irs.gov, you can pull up Form 1040, you can look at what you have on Form 1040 and on the lines on that form and determine what your adjusted gross income would be. Now, some people might have a much lower adjusted gross income this year than they did last year. Again, that is not dependent upon your deductions for itemized deductions or tax losses. It is only dependent upon your gross income that you received, minus some credits. So I would not rush. I'm giving a blanket piece of advice to everybody. There is no rush on filing your taxes, which brings me to my second part. I know a lot of people have been calling saying, hey, I need to get my tax extension filed. So let me clarify that for you. Has pushed the filing date until July 15th of 2020. Now, the extension date is still October 15th. But what that means is that you do not need to file an extension. It would be no different than if the normal filing date was always July 15th. You would not need to file an extension. Now, if you plan on extending past July 15th, then yes, you do need to file an extension, but not until July 15th. So just to clarify, there is no extension needed right now. You can wait until July 15th. Now, is there any reason somebody should claim and file their tax returns right now? Not many reasons that I could find, other than if you have a giant refund check coming and you just want to get your hands on that giant refund check, that might be a reason to file. Okay, but waiting until July is probably going to be the preferred method for most people. So let's talk about the what we refer to as the PPP or the EIDL. So the PPP is the Paycheck Protection Program. Now, for many of you that you have operating businesses, you might have a medical practice, you might have a dental practice, you might have something that you even own and operate on your own. So there was two deadlines. The first was April 3rd, and that was you were allowed to file for the PPP if you had W-2 salary coming in. Now, let me clarify. Even though you had salary coming in, there was almost no one who got to submit their applications on Friday. The big banks have kind of shunned us all, which is, in my opinion, quite disappointing, because the Bank of Americas and the Wells Fargos, I was extremely disappointed with Wells Fargo, who said, unless you have a business banking relationship and unless you have a credit line with us or a credit card, we're not going to take your application. Hey, Wells Fargo, I want to remind you, you just paid a $3 billion fine for ripping people off by opening accounts. And hey, Wells Fargo, I also want to remind you, in 2008, you got bailed out by the U.S. government. And even though you got bailed out, you still followed and collected mortgages from people. So your balance sheets were doing pretty good. Come on, open this up for other people. You're there as a part of this country. Participate, show your good faith. And it's not just Wells Fargo. There's a lot of other banks that are doing the same thing. So, you open your account with these so-called great companies, and sometimes when these tragedies hit, you would hope that they would do the right thing. Unfortunately, some of them are not. So right now, the PPP is opened up. If you cannot find a bank to do it, what you can do is go to SBA.gov. That's SBA.gov. And there's a little PPP lender finder. You just put in your zip code. Now, just because it tells you who is an authorized lender, it does not mean that they're going to lend to you. Now, the way that the PPP works is, let's say, as an example, you set up a real estate property management company. And as a part of our advice, we told you need to pay yourself a salary, because that salary is what makes that company legitimate. What you can do now is apply for a PPP loan, and the amount that you can get is 2.5 times what your average salary is. Now, there's different measurement periods. You can measure either last year, from the beginning of the year into March, and there's a couple different ways that they measure this. Now, what makes this so confusing is the federal government and the SBA was actually making changes to the rules and regulations even after people had submitted. Now, currently the way it works is, if you have an LLC, it could be an investment management company, it could be a property management company, it could be a medical practice, it could be a widget company, it could be an art dealership, right? We've got a lot of different kind of companies that we've set up LLC for. And if you're paying yourself that salary, you can, as long as you pay in the next 2.5 months. Now, let me clarify that. 2 months and 4 weeks, really, or 2.4 months, because we just lost a couple weeks. Then it turns into 100% of a grant. That means it's completely forgiven. You can classify what you pay out for either utilities, rent, or salary. Now, one of the big changes that they made was about a week ago, they were including the FICA that an employer would pay to compute that 2.5 times number. They removed that, but what you can do is there is a free calculator on SBA.gov, or what we've done is we have actually taken one of our inside accountants, and she is doing this off on the side, but you can hire her individually to make an application and submit it to the government, because we've done those calculations on the as a part of our firm. Okay. Now, here's the other thing, EIDL loan. So even though you might qualify for the PPP, and again, you're going to get 2.5 times what your average monthly salary is. And as long as you pay that back out in salary, health insurance benefits, utilities, and rent, it's 100% loan forgiveness. So here's an example. Let's say you've been paying yourself 20 grand a month. And let's say you're a physician. We've set up a LLC for you. You're paying yourself $20,000 per month. Okay. So you take that number times 2.5. So you're going to be able to get a check for $50,000. As long as you continue to pay yourself that check, it's all forgiven. It's a grant. Now let's say that you don't pay it out. It turns into a 1% loan. So worst case, you got to pay the loan back at 1%. Now there's another benefit that they came up with, and it's the deferral of the FICA taxes that you pay. So we know that Social Security is 6.2% that the employer pays, and then the employee pays 6.2. Now when you add Medicare on top of that, it's 15.3%. So it can get pretty expensive. Now the government has allowed us, as long as you defer it no later than September of this year, they're going to allow you to defer that FICA taxes until next year. Now, the upside to that is that if you're trying to cash flow out your business, let's say you have a restaurant or something like that, it might work. On the flip side, there's not been a lot of regulations that have been released as to what's the liability if you close your company. Here's the scary part and why we have not recommended that to anybody. If you close your company, an individual is personally responsible for any employment tax. And there's no shelter in the world that can help you. Just to be clear, you cannot set up an LLC, pay employees, but not pay the employment tax side. They will come after you personally and criminally. So one of the reasons that we've held back from making that recommendation is we're worried that some people might get into trouble. They might defer that. And since there's no precedence, there's no rules on, well, is the government just going to forgive it or are they going to come after you personally? So we don't want to go down that road. Now let's talk about one other benefit that we have. If you have an operating entity, and again, there is not a lot of rules on how this works as it applies to the virus crisis, but you may be eligible for just a flat $10,000 non-repayable grant. And the EIDL also allows you to borrow money at a very low rate of interest, anywhere between 2 to 4%. So if you are looking at expanding your company and you can show the good financials, you have a good credit rating, you might be able to go past the $10,000. However, even if you don't want to borrow the extra money, it would be very advisable to go ahead and just take that $10,000 grant. Even if you don't need it at this point to support the business, put it back into the business. Use it to grow the business. Remember, I always talk about velocity of money. If you just take it out and spend it, it's not going to do you or anybody else any good. It'll throw it into the economy, but it will not be an ongoing money-making machine. If you build that into your business, that's an ongoing revenue source, and the government will get their money back through the velocity of money and taxes. Okay? Let's talk about really the virus containment and what that looks like if we reopen. Now, I do not have enough data. You know, if you look at the political parties, they're all throwing flaming arrows at each other, claiming somebody should have known or, somebody acted great. I don't know. Listen, I'm a money guy. I am not a scientist. I don't sit back and understand everything that goes behind the scenes on a crisis like this. All I can do is assimilate the data that's available to us in the public and put it into an algorithm that I can measure. But even that algorithm and that modeling has variances in it that I cannot account for. And here's a variance. Who would have thought that we as Americans would not comply with staying home? I remember when this whole thing first started happening. And I know that a lot of the news stations talked about the Italians as love to break rules. They don't love to follow the government. And I'll be honest with you, my first thought was, Well, we Americans, not only are we hopefully conscientious about our fellow neighbors, but we also understand the economic impact that not staying at home could have had. I was really wrong with that. Now, I accounted for me being wrong in my economic mapping because while the rest of the company in economic mapping was estimating mid-April, I pushed it out until mid-May to June. And I still am holding to that right now, assuming that when we open the country back up, we don't see this mass disobedience and everybody starts, having big parties again where they're inches apart and we have another outbreak and then we still don't see the economic situation improve. So right now, the virus, from what my algorithms are showing, is still allowing us somewhere around mid-May to June to reopening most of the country. I don't see places like Chicago, LA, Miami, Los Angeles. I don't see them fully operational until August or September. So the model that I built that shows exactly when I'm estimating that this is going to come back in, and I'll go back to it just to show it to you. So as you can see here, my estimates are somewhere around May or June, we start to reopen. And then right here, August to October, the spending spree starts to happen because this is when a majority of the country is going to start reopening and spending is going to start to happen again. The consumers are going to, especially now, they're going to want to get out and really spend a lot of money. Now, again, this does not prevent or eliminate the institutions manipulating this. So what I'm warning you of is expect more volatility, which goes hand in hand with my recommendation of dollar cost averaging in. If you dollar cost average in, some months you're going to buy higher, some months you're going to buy lower, but you're not hedging the market timing where you're saying, hey, I'm going to buy it all at the beginning of the what I feel is the biggest drop, because those kind of people are usually sorely disappointed because the minute you think it's going to drop by 10%, it drops by 15%. Okay. So again, dollar cost averaging is, I think, the smartest and best way to go over the next year. So give me a second here as I jump back in. Okay. So the number one thing we want to talk about really is the stock market. And again, expect more volatility. It's not going to change at least for another year or so, but I think we have some great buying opportunities over the next 6 months to 12 months. Mortgages, make sure that you're getting your refinance application in. Real estate, again, I would jump online to either Facebook or YouTube, watch some of the webinars and live streams that I did. I did 2 so far. One of them was on the emergency actions to take with your real estate. And then the other one was how to measure and analyze real estate investments. Watch those, and nothing has changed in my modeling since I created those. The fourth thing is PPP. If you own an LLC, if you own a business, for goodness sakes, take the granted money. I hear some of these restaurants out there saying this is a terrible idea. Listen, I understand. Hopefully what the government will do is they will push out the 2.5 months, recognizing that their deployment system is already taken way too long, and that many of these people that are like restaurants, they won't be able to deploy the entire 2.5 months of payroll because people won't be back engaged again. So I think that the government's going to make that adjustment. The EIDL loan, see if you are qualified to get that. That's $10,000 as a non-repayable grant. That's a kind of a no-brainer if you're eligible for it. The stimulus checks, I know a lot of people are getting those stimulus checks at this point. Again, don't worry about what you think your deductions are going to be for 2019. It's going to be based upon adjusted gross income, not net taxable income. Tax rules, you do not need to file an extension right now. That's very important because at this point, a lot of people are freaking out going, I got to get my extension in. You don't. Tax filing date is July 15th. And unless you're going to extend until October, then I wouldn't recommend even worrying about it. Virus containment. I don't know how else to explain this to you, that, our team, we've got about 18 people on our team. And we talked today about what we can do as a part of our civic duty to help this human tragedy. I think all of us can do our part. And we've all agreed as how we're going to do our part is we're going to continue working at home until this thing is completely, because we know that out of 18 people, look at what they showed on the super spreaders. 9 Boston Scientific executives spread it to an estimated 2,500 people. So we're going to do our part. We're also doing our part by trying to help and reach out and teach as much as we can. Because we can't be, I'm not a doctor, and so I can't be in the hospitals. I can't be fighting this virus on the front lines. So as in any engagement, any army, what are the statistics? For every one soldier on the front lines, there's 80 support people in the background. So what we're doing is we're making sure that we all come out of this financially stable. Some of you may even come out much further ahead than before the virus, which I talked about in, why more millionaires were made in 1929 crash than at any other time in history. So this is what we're doing as far as our part. We reach out to you to ask you to do your part too. And if you need help with your money, you need help understanding what these smart decisions are. If you're not a client of ours, reach out. They'll schedule a phone conference with one of the financial planners. If you are a client of ours and you've got questions, reach out to the financial planners. Be on a collaborative team, and that's what they're there for, to help you. With that in mind, please stay safe, and we'll talk to you soon.